Good morning, everybody. Welcome to the game plan. It is Fed Day. We're going to get into a lot of the nitty-gritty charts on what the Fed could be doing today, how the markets will react, what crypto is doing, and what so many other things are going on. So let's get into it. Before I get into it, though, quickly behind me, the Wheel of Appreciation will be spun today, and someone will win a prize valued at basically $300 to $5,000. I'm going to be doing that every day on the game plan. Remember, you need to be following Verified Investing either on YouTube or on Twitter. So make sure you're one of those, and we'll go over some other rules later on. All right, into the action we go. Nice. All right, let's take it into the charts we go, or into the data feed here. We have the market blast today, the Federal Reserve policy decision at 2 p.m. Eastern time. No rate hike is expected, no rate cut is expected. It's going to be all about what they say, guiding the market to understanding what we're going to get in June. So right now, the Fed Watch tool tells us there's a 55% chance of a cut in June. But again, I guarantee that number will shift dramatically today when we hear from the FOMC chair, Jerome Powell. Now, just a reminder, guys, I'm going to be doing it live right here, 1:50 p.m. Eastern time, 10 minutes before the Fed decision. I will be live here with Dr. B. We're going to be analyzing charts real time as the decision comes in, looking at what he's saying, hearing what Jerome Powell's saying, and watching the market reaction. All right, so that's going to be the kicker. The next key tactic here, or key, is CMG announces a 5-for-1 stock split. Just to understand what stock splits do, they don't change anything fundamentally, but historically what we do get is a market reaction that is positive. The reason why markets react positively, or investors buy up stocks and they go higher usually on announcements of stock splits, is that essentially it's making the stock cheaper, right? Right now, Chipotle is trading just under $3,000 a share. A 5-for-1 stock split is going to put that around the $600 level, right? And so a lot more people will feel like they can afford to buy a share of CMG, Chipotle, and therefore it gets a positive reaction upon the announcement. Now, again, does it change their profitability? No. Does it change anything else? The answer is no. In fact, when you have a stock that's trading at highs and they announce a split like this, it's usually or potentially an opportunity to think about a short once you get the pop on the stock split. So we'll talk about that. I'm going to look at that chart in just a minute. All right, lastly, a couple things real quick here, guys. Intel wins a contract from the government worth $8.5 billion. Last I checked, the stock was up just a little bit. And Boeing's down on cash drain and the dedication to making sure it's building, its orders are being built in tip-top shape. One of the things I was hearing is that they're really limiting the amount of planes that they're going to build because they want to make sure their process is dead on and it's done precisely. And it seems like, and again, just throwing this out, from what I'm gathering from Boeing, is what has happened is because they've had such a massive backlog of planes, of the demand for new planes, they've been rushing to try to meet that demand by building faster and faster. And what happens is when you build faster and faster, things get skipped over, quality control suffers. And that's really what they're trying to fix here. Now, the stock has been beaten down. We talked about maybe an opportunity here on the long side as they start to get their ship in order. Let's see again, we'll look at the charts. All right, so let's do that right now. Let's jump into the charts and see what we have in store for us. Number one, I want to quickly take a look at the dollar. The U.S. dollar ahead of the Fed decision today. A couple things. Number one, we're getting very close to resistance here. You can see the wedge pattern, again, down-sloping trend line. This is going to be big resistance. My guess is we touch it either before the Fed or at the Fed. Don't be surprised if it gets rejected and comes back in once the Fed decision is fully in the market. So we'll be watching this live again going into the Fed decision. I'm going to have this up. I'll probably divide up my chart into multiple charts so we can actually watch multiple things when the Fed announcement comes. One of them definitely will be the dollar. Another will be the 10-year. Another, the S&P. We'll look at other things as well. All right, couple other tidbits here. If we go to the NASDAQ 100 pre-market was rallying up. Yesterday, by the way, we did see a good reaction. We saw a gap lower and the markets floated back up, generally closing positive on the day. Today, we were floating up. This is where we closed yesterday. You could see sideways, this is after hours, and then a float up, and we're coming back in. I don't expect a lot of price action ahead of the Fed. everyone, honestly, at least big traders, they're going to be sitting on the sidelines, just like generally me, waiting to hear what is said, and then I'll see if there's a reaction trade to be had off the FOMC decision at 2 o'clock. And don't forget, the press conference is at 2:30. We'll be covering that right here as well. Now, going to the daily chart, just a reminder on the daily chart, the NASDAQ 100 has confirmed a breakdown. And again, I've been really good on teaching this to you guys, and I appreciate all the positive feedback on the teaching that I do in these in the comment section, guys. It really does mean a lot to me. It makes me feel good that I'm impacting you guys and helping you understand the markets, understanding all the data that's coming out and how to read charts. But looking at this again, we know we confirmed below based on the confirmation signal. What that tells us is that today we could even go back up here, but this will be major resistance. This would be major, and again, you'd expect it to get rejected and continue to break down. The only way that gets negated is if you reconfirm above this line. Once you confirm below a line, you must then confirm back above the line to negate the breakdown. By the way, that goes for a breakout as well. So again, if we have a chart here and we're hammering on resistance, right, and we break out and we confirm, it can retest here. That's a buying opportunity. And in the metrics and probabilities, the likelihood is it'll bounce off of it like that and go up. However, as we know, charts aren't 100%. It's all probability based. If it gets below, it's okay, but if it confirms, then that negates the breakout. And one of the things I've learned is the biggest moves come from failed moves. So if you get a breakout and then it fails and reconfirms back below, oftentimes you get a big move to the downside and vice versa on the other side as well. All right, so that's the chart of the QQQ. If we look at the SPY, the S&P is a little bit more muted today. What we're seeing is this is where we closed yesterday, sideways consolidation, a little bit of a float up, and we've really come back down, essentially flat to negative on the S&P. And again, I expect us to kind of trade around that range going into the FOMC decision here at 2 p.m. Going to the daily chart, remember, this is an unconfirmed breakdown. The difference between confirmed and unconfirmed is probability. So when you are below the line, probabilities still favor that you'll break lower, but the probabilities are like 60-ish percent, 55%, barely over the 50-50 line. Once you confirm, history shows us that the probabilities now shift heavily to the downside, like 70% chance. Still 30% chance it can fail, but again, when we're dealing with probabilities in trading, that's a really important differential to pay attention to. So again, we closed below, no confirmation, and obviously yesterday no confirmation. We have to watch this level today, or if we confirm, we have to close below this level. Now, it may be that we just don't confirm today either, and it kicks the can into the road into tomorrow or Friday or next week, but that's something that I'll be watching, and I'll guide you guys on this. When we go live today at 2 o'clock or just before 2 p.m. at 1:50 p.m., I'll be guiding you guys as we see the reaction, what that could mean for the daily chart of the S&P 500. All right, so here's your Boeing chart. Boeing, again, taking a dump out on that little bit of news this morning. We know this stock has been hammered. It's actually got a reasonable bounce. Now, we're trading around 178, and I want to show you the daily chart here. So if we go to the daily chart, look at this, folks. This is a major technical level here. So again, we talked about this, how we broke lower. Once you broke the longer term channel, you were destined to go down here. And if you just go back a week or two in these game plans, I literally said, guys, this is your zone right here. All right, so that still is the zone. This is right around this 175-ish level to 176. So even pre-market, we've touched that level. This remains a big support level. If it breaks, there's a little bit more support around 170. But in general, this is kind of where I start looking at it and I say, okay, depending on if the market stays strong, right? So, I mean, if the stock market really collapses, we know the NASDAQ 100 is already broken down. S&P not quite yet in terms of confirming the breakdown. But if the markets stay okay, then this should get a retrace bounce here to the scene of the crime, right? But you remember, if you're a swing trader, and let's just say it does bounce, where's your target? Right here. Would you get greedier than that? And the answer is no, because this would be a retrace. So here you closed below, here you confirmed, retrace to the scene of the crime. Probability should tell you it gets rejected there. So again, it's really about looking at the charts and think about every move in a chart. the probabilities. Think about it like for those of you that watch poker and they show you the odds every time a new card is shown or situations like that. That's what essentially every time you get a new candle in the chart, the odds are recalculating on whatever the probabilities were of a move in one direction. Good way to think about it. So the point is that if we do get a bounce off this 175-ish level, your exit strategy, or at least my exit strategy, would be at the 200, retrace to the scene of the crime. Because again, not only do you have that trend line there, but look at all this sideways chop, which is a lot of buyers and sellers. There's a lot of buyers down here that then they got flushed and they're like, oh crap. Once they get back to break even, a lot of the tendency is for investors to say, you know what? It was a scary trade. It flushed on me. I'm going to exit, and that creates that sell side action as well. All right, a couple other charts I want to go over. Here's Chipotle. Chipotle trading at $29.33 pre-market. Here's when the announcement was made of the stock split. Look at that move up. A lot of sideways chop. I want to show you this. So number one, we're getting close to the even number of 3,000. Number two, if we do a measured move, and I'm going to go to the monthly chart to show you guys this, right? So there's a monthly chart measured move that actually aligns here. So what I'm going to do is I'm going to take a measurement from the lows over here of this bull run, right? And again, let me just make sure Chipotle, yep, that's the chart that we want. And essentially what we're going to do is take that measured move from here to here, right? It's just basically above $1,700. And then we take this low here and we measure that up $1,700 approximately as well. And what do we get, guys? Look at what we're getting here. Essentially, we're getting this 29.40 level. And if we looked at that pre-market print where we currently are, that is essentially where this move is. So this would now be a measured move. And this is where I start to, and listen, it doesn't mean it's a no-brainer short. There's no such thing as a no-brainer short. But when you're looking at extended moves on Chipotle, like this is the monthly chart. We've had 2, 4, 6 straight up months in a row. You're coming into a time count, which is a whole nother can of worms of amazement. But you get up here and you start to say, okay, the stock split doesn't change anything fundamentally. It's not like the company's more profitable because they do a stock split. Now you're getting in that over irrational exuberance mode where I start to think about maybe once the stock splits, maybe inching into a short trade on Chipotle. All right, but again, you have the measured move, you have the 6 count here coming into a 7 count, lots of potential opportunities that could, for me at least, and I just speak from my own perspective of what I like to do, that would be something that I would start to pay closer attention to on the short side. All right, so let's just quickly go into a couple other charts here. I do want to just point out Microsoft here. Microsoft has a wedge pattern that's getting very close. Now, again, one of the things you watch for on these type of wedge patterns is for that break, right? So here we can clearly see that you have this point here connected here, and then it got rejected right there. You have these lows, low, low, and low. Now, again, wedge patterns that are angled to the upside, right? So if you have something like this, all right, generally, I would say about 60 to 70% of the time, they will break to the downside. However, if they don't, you can get a very explosive move up. So just be aware. I don't like to jump the gun in these situations unless I have multiple other factors. But what I would say is that if we do confirm below the wedge, that's where you get a substantial fall in the stock. So this one is now on watch as this band gets narrower, this wedge pattern gets narrower and narrower. And by the way, just to show you guys odds, remember, everything we do here in Game Plan is all about odds. Which way did this one break? This is the NASDAQ 100. Broke to the downside. All right, now which way did the Spiders one break? Well, as of now, it's unconfirmed, but it broke to the downside. So again, you will eventually come across charts that break to the upside when they have this pattern, but it certainly is less. If you look at 1,000 of them or 100 of them, the probabilities, again, favor the downside from these tighter and tighter wedge patterns that are forming. Okay? Quickly, again, just looking at Meta here. Meta, again, I do think that this is a shortable play here. And again, I am short on Meta, just to be fair. And again, the idea here is very simple, is that you're into this major resistance area right up here. And look at this move. This is a monthly chart. You very rarely see this type of explosive move to the upside. I think part of this was that it had such a dramatic move to the downside, it would have to play catch up. But again, one of the things to look at here is you also have, if you take this low to this high, that distance, right? And then you do this low to this high, it's virtually the same distance, essentially a measured move as well. All right, guys, so what I want to do now is we're going to come back to center screen here, and we are going to spin the wheel of appreciation. Now, I just want to quickly talk about what we have on this wheel. And again, I'm planning to spin this wheel every day, every single day of the game plan. So on this, we have the Winning Trader series right here. All right, that's about a $5,000 course. Range Trading Mastery by Paul Sampson. He's a VI Pro. That's worth about $300+. The live trading room here that I run, that's $400. TradingView membership for premium, $600 value. We have verified investing crypto, 3 months here. NordVPN year, Lux Algo full year, and so on and so forth. But Kitco, got to mention Kitco, guys. Kitco's rocking it here. They're donating 10-ounce silver pieces for whoever wins. That's right now at current price of silver. That's about $250. Again, valuation, you probably have to add that premium that you'd have to pay if you got that as well. We have the 1-minute scalpel here, the new course by Dr. B. Incredible. Like, this stuff will blow your mind. Value $300 as well. And again, just to reiterate here, amazing sponsors from TradingView donating a year to Lux Algo to NordVPN to Kitco and all of the other stuff here. I thank you guys from the bottom of my heart for this. Now without further delay, we're going to spin it. So let's find out. Guys, before I spin it, you have to follow Verified Investing on Twitter or on YouTube. And today, to make it easier for my staff to calculate a winner, you must comment one thing that has helped you from the game plan. All right, we will announce the winner tomorrow from today's spin because we're going to look at who's commented. But again, comment one thing that the game plan has helped you with in your trading or investing life. Have a wonderful one. Let's go. All right, there it is. So today, guys, 1 month of the live trading room, 1 month of the live trading room. That's $400 value right there. That will be given away to someone who comments today. And again, we'll make it flexible. You can use it now or you can use it in a few months, whatever fits your schedule. But again, guys, congratulations to whoever that winner will be. Very cool. Now, last thing what we're going to do, guys, we're going to take a 30-second break to thank Lux Algo by playing this commercial. Guys, again, this is the wheel of appreciation. These sponsors that are donating, and by the way, if you're a sponsor out there that wants something on here, feel free to reach out to us. But I think it's so important we give back. Again, I've had a good career. I try to help people through these game plans, and these sponsors behind me are doing just that. So we got to all support our sponsors. All right, take it away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, back into the action. Here we go. Couple things to go over. We have Bitcoin. Now, Bitcoin's had the big pullback. You can't say I didn't warn you guys, right? We talked about the inability for the weekly to close above 69,200. We've talked about how, again, it pierced just like, and the crazy thing about this is Bitcoin pierced just like in 2021, it was at 65 and then pierced 65 going to 69. Here it pierced essentially 69 and change and went to 73 and change. And again, those type of things, these are things that I watch for. But the kicker is this, is that after such a dramatic move up, you just don't want to buy breakouts. Like this is one of the biggest, and this drives me nuts because there's so many top supposed pros out there that are like, oh, we broke 70, it's clear sailing, okay, here we go. And it's like, no. And by the way, it doesn't mean it won't keep going in those situations, but you just don't chase. Chasing is like literally the cardinal sin of investing is when you chase. First of all, there's always another investment. There's always a pullback. Think about in Bitcoin's history. Every bull cycle, there's always a massive drawdown. And so, is this the drawdown? Maybe we did hit technical support, right? So, I mean, you can look at it and say, okay, well, we hit this level right in here. That's technical support. At least you're buying it on a pullback. Don't be buying it above 70. I mean, I don't know. To me, that just it's one of the reasons why I almost went broke multiple times as an early trader trying to buy breakouts, because it's the breakouts get people to get emotional and jump in because, oh my God, it just broke the high. It's a new, and the media like, oh, it's a new high. And then what is it doing? It's suckering in people that eventually they want a rug pull on. And when I say they, this is just market psychology. It's no one in particular. But it's just the way things work. I mean, go back to charts. By the way, in 2007, in the market, in the S&P, this was what the market looked like, okay? All right? This is the Great Recession, right? Great Recession. But this was your .com high, and this was your 2007 high, and you broke that high pivot by a fraction, and then it had one of the biggest drawdowns in market history since like the Great Depression. Not necessarily the biggest, but still it was a massive drawdown of 60+% in the S&P. So my point is, again, is that you have to be able to fight the urge. And it's so hard to do. Trust me, I see this happening all the time. For me, I've changed the way my brain works, where I start to say, all right, wait, it's breaking. If I don't see the monthly or the weekly or this, then I'm not going to trust it. The confirmation signal is a massive help to that. But these are the things that really keep me safe. Now, having said that, Bitcoin has pulled back. We got very close to 60,000. As I said, lots of good support in this range. Let's see how it acts. Is it going to make a bear flag, right? Bear flag would be like this, in which case you're going to go down here, and there's a big level right here, and if the former spot ETF right in here. So this is my zone, right? My zone is right here, 52 to 48, basically, 52 to 49. So the question is, are we going to reverse like this, which would be bullish, right? Then I would trust it if we get a weekly close above that 69 level, or is it going to bear flag, which then means probabilities start to favor the downside. And this as a trader is so important. It's like, one of the biggest issues with newer investors, a lot of this in crypto, is that they get so hung up on like, oh, I got to become a millionaire so quickly. So the only narratives I'm going to think about are going to be the bull case where it goes to 100K by next month. And what ends up happening is that's where you go wrong, is you have to, as an investor, plan out both scenarios. They will guide you. The charts will guide you. The charts are a foreign text. Like, imagine I give you a book in a language you don't know. And what your job is to do is to learn how to read that text, that foreign text. That's what a chart is. So the more you read it, the more you start to understand what it's telling you. Now, sometimes we read it and we still get it wrong, which is the nature of charts, but oftentimes you'll understand better what the likelihood is for the price action. All right, by the way, yesterday, Cardano, I gave you guys this level yesterday on Cardano. This is literally the same line. Hasn't moved one bit on Cardano. And again, by the way, do I think Cardano's going to rip back up? A ton, no. But, I mean, if you're just talking about a technical level for a quick little trade, this was it. I gave it to you guys yesterday. Look at that. Right there. And look at the bounce already. Now, where is this going to have resistance? Right up here. Right in this zone. So you're going back to like 63 to 64, maybe 65 cents. But that's from 57 cents right here, which isn't a bad move percentage-wise. And these are more the quick little trades that I like to do. I like to stay nimble. I like going to bed mostly in cash. Definitely more on a positive side. Take a look at INJ real quick. INJ hit a major technical level as well. Look at this trend line. Now, the reason why I'm paying attention to this trend line is because, number one, you should get a bounce, right? Number two, if this ever breaks, holy cow, you got a lot of downside, guys. So just be aware, if you're someone that's in INJ or if you're interested in INJ, you really want it to hold this level. This is a massive support. Look at how many times it's hammered on it. If this breaks, you get a watershed moment with a big move to the downside. All right, a couple more charts here I want to go over. And by the way, I saw someone asked for uranium, so of course I'll cover uranium today. Gold, there's not much going on here. Very simply put, we're still making what I would consider to be a bullish pattern here, a flag pattern there. There's your flagpole right up there. Now, again, my big question, and this is why I'm not entering gold ahead of the Fed. And the reason is because you could easily get a drop like this, and it would still be an inside bar bullish pattern like this, and it could still go down a fair amount, or it could break out. But the kicker is this, is that for me, I don't want to anticipate unless I have multiple factors telling me. And when I say multiple factors, I need more than just a bullish consolidation pattern. Right? Now, obviously, my longer-term view is still very bullish on gold, but just in a short-term trading atmosphere, I don't want to over-anticipate. Oil here real quick, guys. Oil broke out. What do we know about this chart, guys? We know that when you break out and confirm, is there a chance you could come back to the scene of the crime? The answer is yes. So don't be super surprised if that happens. I don't know if it will happen, but you're seeing a little bit of drop here. Your kind of downside case is here and then there. That would be the most likely scenario, or at least something like this, and then a move back up. Eventually, as long as you stay confirmed above this line, probabilities favor that higher level. All right. And again, we'll do two other charts. We'll do natural gas. Natural gas pulling back a little bit today. So far, so good, though, on this trade. One of the things to watch here, we have a very defined level of resistance right here. Okay, you can see high here, low here, right through here. Then it broke down, retested, retested, retested. So what you're watching for is this 185-ish level. If this can break 185, right, 1.85, you should get that move up to $2.05, $2.03. And lastly, uranium, guys. I saw, again, someone had asked for this chart. I haven't done it for a while. Look at this chart. Is this a bullish or bearish chart? Not so good. Not so good. What do we have here? We have a wedge pattern. It broke down here, retraced, but then hadn't confirmed here. There's your retrace to the scene of the crime, and there's your rejection. So now what you're looking at is this low here, which is right below 27 on the URA. If that breaks, you're likely headed down here, which actually starts to become some decent support, right around $24.50 to $25. So I would say around 25. If this breaks this 27 and change level, or 27, you're likely headed to 25. 25 actually looks good. But again, you can see how it was following this pattern and then kept on hammering on these levels here, and finally broke down, retraced to the scene of the crime once it was confirmed. This now becomes major resistance. It rejected it and is now testing that low. All right, so let's conclude today. Congratulations to whichever winner you are on the live trading room. And of course, guys, as always, the wheel of appreciation will be spinning daily because I do appreciate you. If you notice, pretty much all positive comments, all good stuff I like. That's me actually liking it. I don't have anyone on my staff doing it. I always say I read the comments, and I really do, and I appreciate it. So thank you guys for keeping me motivated to keep teaching. Hearing that you guys are learning is everything to me. So thank you, and have a wonderful rest of your day.